Welcome everyone to the presentation of the 2020 relief programs provided to you by Losee and Associates. My name is Mary Losee and I'm a chartered professional accountant with a CGA designation. I've been in the accounting and tax field for over 30 years and I've owned my own business for over 14 years. We have two offices to service you at 1758 Bath Road in Kingston and 125 King Street East in Gananoque. Information was obtained from Canada Revenue Agency website as of October the 20th, 2020. Changes may have taken place since the presentation of the webinar. This material is prepared for information purposes only. Although every effort was made to carefully prepare the materials, no organization or person involved with these materials accepts any legal responsibility for their contents or any consequences from their use. Any specific facts, situations should be reviewed by a qualified professional. Today, we're going to talk about four different programs available from Canada Revenue Agency. They are CEBA, Canada Emergency Business Account, the CERS, the Canada Emergency Rent Subsidy, the TEWS, the Temporary Wage Subsidy, and the CEWS, the Canada Emergency Wage Subsidy. CEBA, the Canada Emergency Business Account, was originally launched on April the 9th, 2020. It was intended to support businesses by providing financing for their expenses to safely navigate a period of shutdown for the COVID-19 outbreak. Loans of up to $40,000 have been provided to business owners to pay operating expenses. These loans would be interest-free for a period of time. You would apply for CEBA at your local bank. To qualify, you initially needed to have payroll for 2019 of at least $20,000. This has since changed to include small business owners who do not have a payroll, but you are required to have a business bank account, a Canada Revenue Agency business number, which is the 9-digit business number, and non-deferrable expenses of at least $40,000. These would include your rent, property taxes, utilities, or insurance. When applying for this loan, you would have to be able to provide the rental agreement, the utility bills, the property tax assessments, or insurance policies would need to be provided in order to qualify. These loans have to be placed into your bank account as well and not sitting in any unused account or a loan or credit card for the interest-free portion of it to qualify. If you decide to apply for the loan, be sure to keep the documentation from your bank, as we have found that there are differences in loan agreements from bank to bank. Repayment of the loan by December the 31st, 2022 will result in a loan forgiveness of 25% up to a maximum of $10,000. Keep in mind that this all depends upon your loan agreement. It's also based on the certain date of when you pay it back. So for example, as of December 31st, 2021, if the amount that is due back and you had paid $30,000 back, you would have a forgiveness of $7,500. So check your loan agreements and pay back as much as you possibly can on the due date in order to qualify for the forgiveness. CEBA has been extended to December 31st, 2020. And if you have any questions, you can call the CEBA Center at 1-888-324-4201, or the information is also available on the website on the slide. The second item we're going to discuss is the CECRA, which is the Canada Emergency Commercial Rent Assistance. To qualify, you must pay no more than $50,000 monthly gross rent per location. You would have had to earn no more than $20 million in annual gross revenue. And most importantly, you would have had to experience at least a 70% decline in your revenues. The property owner must apply for this, and the tenants would pay 25%. The government would then also share the remaining 50% through a forgivable loan. The last day to qualify for the July, August, September subsidy is October 30th, 2020. CRA is a new Canada Emergency Rent Subsidy, which will provide simple and easy to access rent and mortgage support until June 2021 for qualifying organizations affected by COVID-19. The rent subsidy will be provided directly to the tenants, while also providing support to property owners. The new rent subsidy would support businesses, charities, and non-for-profits that have suffered a drop in revenue by subsidizing a percentage of their expenses on a sliding scale up to a maximum of 65% of the eligible expenses. Organizations would be able to make claims retroactively for a period that began September 27th and ended on October the 24th, 2020. There will be more information on the Canada Revenue Agency website, although when I prepared this presentation, there was very limited information. Next on our list is the CEWS, the Temporary Wage Subsidy, which is calculated at 10% gross payroll. It was set in place to protect jobs during the COVID-19 by subsidizing employers' payroll. It's geared towards small business owners and nonprofit organizations, and it started on March 18th, 2020. It is a subsidy of 10% of remuneration paid with a maximum amount of $1,375 per employee or $25,000 per employer. It was intended to be temporary, so it actually expired on June the 19th, 2020, and it's not extended like the wage subsidy. You will also need additional accounting work in order to prepare a form called a PD-27 that has to be reconciled with Canada Revenue Agency. And the figures that you retain from your source deductions are used in the wage subsidy calculations if you apply. The last item we're going to discuss today is the CEWS. It's the Canada Emergency Wage Subsidy. It was created to encourage employers to rehire employees or hire new employees. Its calculation is based on the decline of sales, and it is widely available to most businesses as long as you have payroll. Periods from March 2020 to the summer of 2021 will be applied, and the beginning periods from March to July are not complicated, but the periods from 5 to 9 do seem very complicated. The subsidy, you are entitled up to 75% of your wages, up to a maximum of $847 per week per employee. You also must have a CRA payroll account on March the 15th, 2020. And depending upon when you put in the subsidy forms, you must have suffered a reduction of gross revenue of a minimum of 15% for period 1 and 30% for the next 3 periods. You must have eligible employees, and you also must have a direct deposit set up with Canada Revenue Agency. You need to submit your application via either My Business Account or have your accountant assist you where they would go through Represent a Client. You will also be entitled to receive a subsidy for whether they are non-arm's length employee or arm's length employees. Rules for eligibility and calculation are very technical and quite complicated. I'm going to go through them briefly in the next few slides. And I suggest to contact your accountant if you require additional assistance. In addition, we have heard that this program is being highly audited, so you will need to ensure you have proper paperwork and backup documentation to prove your calculations. So the subsidy is provided based on 4 weeks in a specific period. Currently, there are 9 periods available, and when you're filling out the forms, you have to make sure that you select the correct period. So for period 1, it would be from the payroll from March 15th to April the 11th. Period 2, April 12th to May 9th. Period 3, May 10th to June 6th. Period 4, June 7th to July 4th. Period 5, July 5th to August 1st. Period 6, August 2nd to August 29th. Period 7, August 30th to September the 26th. Period 8, September the 27th to October the 24th. And period 9, October 25th to November the 21st. Calculation number 1. This is part of what they call the old section or the all or nothing test. So periods 1 to 4 are based on March to June 2020. Period 1, you must have a decline of at least 15% in gross sales. For periods 2 to 4, you must have had a decline of a minimum of 30% in sales. This calculation, you can also use the average of the January and February 2020 amount as a comparison. In addition, if you qualify for one of these periods, you can also qualify for the following period, which is called a deemed entitlement. The calculation is as follows: gross payroll times the qualifying percentage minus the CEWS, which is the temporary wage subsidy of 10%. So for example, you would have $15,000 times 30% minus the amount paid for CEWS is $3,000 is what you would be entitled to as a subsidy reimbursement. Keep in mind, there is also a maximum per employee of $847 per week per employee, and some restrictions on the employee have been unpaid for 14 days or more. So just be careful of the calculations. Income is included as other income and is taxable by the business or corporation. Major changes were announced in July of 2020, where the deadline was extended to January 31st, 2021 for all CEWS periods, which can be applied retroactively. Also, effective July 5th, 2020, changes were made to eligible employees and new rules for the furloughed employees or employees on leave with pay. Now, 2 types of calculations: the base subsidy amount and the top-up for periods 5 to 9. These changes included a subsidy rate where it varies depending upon how much your revenue is dropped. If your revenue drop was less than 30%, you can actually still qualify and keep getting the subsidy as employees return to work and your revenue recovers. Hardest hit employers qualify for higher amounts, and the employees who were on unpaid for more than 14 days can now be included in the calculation. You can use the current period's revenue drop or the previous period's, whichever works in your favor. So the calculation would be gross revenue for the month compared with your prior year. Now you do need the exact percentage. This is multiplied by the factor for the period, for example, 1.2. So you would have a 30% decline times 1.2, which equals 36%. You can also make an election based on the average month gross revenues from January and February. But if you do choose this election, this method must be carried out for the first 4 periods. Calculation number 2, part 2 of the top-up. The gross revenues for different months, which are 3 months prior. So for example, for August, you would use May, June, and July revenues compared to that of the prior years to get your percentage. And you would multiply that by another factor of 1.25, which stays the same throughout the entire program. So for example, you would have 60% minus 50% would leave you 10% times the 1.25 would allow you to qualify for 12.5%, which is added to calculation number 1. You could qualify for the top-up and not the base subsidy if your current month is higher, with prior months lower. So for example, your overall calculation would be 36% from part 1 plus the 12.5% from part 2 for a total subsidy allowed of 48.5% of your wages. You should be sure to watch for the calculation as the subsidy rate drops over time with a maximum week's benefit for employees. And it may be beneficial to apply later after calculations are done due to the selection method that you decide to use. As I mentioned, periods 1 to 4 are on the old calculation, periods 5 to 6, you can use the greater results as calculated from period 1 to 4 or 7 to 9. In period 7 to 9, you would use the subsidy split, which is the base and the top up, and then period 10, it hasn't been released as of yet. We will be going through a calculation briefly on the Canada Revenue Agency website. So there is a calculator in order to assist you in determining if you qualify. You'll need your monthly income for the last year and for the current year. You will also need the payroll records for the period you wish to apply for. Canada Revenue Agency has provided, as I mentioned, a spreadsheet as well as an online calculator. Each period has to be selected to determine the subsidy amount. This is where you can choose the calculator or the online calculation. We have found that the spreadsheet is best due to the fact that you can keep the copy for backup. As well, I want to stress you to watch for updates on the spreadsheet, as you should use the most current version of the spreadsheet, as Canada Revenue Agency is updating quite frequently. CRA has also started auditing the subsidy program, and we have been told that it is a very thorough review. It is a 9-page letter requesting information to be supplied within 10 days. So make sure, once again, you have your backup. CEWS summary. So to keep in mind that all claims are based on gross revenue or gross income. You could be calculated on the accrual or the cash basis. Benefits are based on the wages, salaries, and the benefits of either non-arm's length or arm's length employees. And Canada Revenue Agency does provide an Excel spreadsheet or an online version for you. There are other programs available out there. I suggest that you check out the Canada Revenue website listed below. There are work sharing programs, jobs and opportunities for youth, co-lending programs for small to medium firms. There's also support by industry, whether it's agriculture, culture, air transportation, tourism, energy, or even academic research, as well as Indigenous business relief. So this concludes our formal presentation. I am going to follow up with working through the Canada Revenue website forms for you online once we do resume. I'd like to thank you, and I hope everyone stays safe. This has been brought to you by Losee & Associates. We are an accounting and bookkeeping office. We also do payroll and taxes, both personal and corporate. If you do need assistance, feel free to give us a call at 613-766-6323. Thanks.